Good morning and welcome to this exciting time to talk business. My name is Bladun Nukema and it's Business 360 on Spectrum TV. In today's Business 360, we look at incessant and increasing buys of gold by the central banks across the world, most importantly, the Central Bank of China. We'll also talk about the stock market from a Nigerian point of view and the Asian market, how it fared this morning. We'll get to look at inflation rates in Uganda, as well as the Reserve Bank of Australia's perspective, as Philip Lowe spoke to the National Press Club. We'll begin from the Reserve Bank of Australia. The Reserve Bank of Australia Governor Philip Lowe spoke to the National Press Club the day after the bank decided to pause rate hikes. He discussed the importance of returning inflation to target and the roles that both aggregate demand management and expansion of the supply side of the economy can play in maintaining low inflation. Would be a good time to listen to Governor Philip Lowe.
And good afternoon, everyone. It's a pleasure to be back addressing the National Press Club. I'd like to begin today by explaining yesterday's monetary policy decision. I then wanted to discuss why it's so important that we return inflation to target and the role that aggregate demand management and the expansion of the supply side of the economy can play in that task of returning inflation to target. As you would all know, at yesterday's meeting the Reserve Bank Board held the cash rate unchanged at 3.6%. This is after interest rates were increased at our previous 10 meetings, as you can see here. The decision to hold interest rates steady this month was taken to give the Board more time to assess the economic outlook and the impact of the increases in interest rates so far. Since May last year, interest rates have been increased by 3.5 percentage points. That's a very large increase over a very short period of time, and I acknowledge that it's been very difficult for many people.
The outlook of it has been that of stability for the Australian people, as the Central Bank or the Reserve Bank of Australia has kept its pulse on interest rates. Let's move to Africa. Africa has been touted as the next frontier for tech investment, with many startups in the region making significant strides in recent years. However, according to data released by Disrupt Africa, African tech startups raised 57.2% less capital in the first quarter of 2023 than in the same period last year. In 2022, African startup experienced a successful year for venture capital, raising a total of $6.5 billion. However, it appears that this trend has not carried over into 2023. The decline in funding is a major concern, particularly because the first quarter funding made up more than half of the total capital raised by African startups in 2022. According to reports, this could suggest that startups may continue to struggle with funding throughout the rest of the year. Now to Kenya. Kenya has been experiencing an influx of tech startups in recent years, and here is why. A study by Kenyatta University and Maitree Capital shows that Kenya's $8.7 billion retail industry provides many chances for investors. Kenya's dynamic internet presence, high mobile phone adoption, and youthful people resources are also a few reasons for this. Thus far, in 2022, 242 tech firms have raised $1.28 billion between January 2015 and November 2022. According to the poll, the country boasts more than 100% mobile penetration, 90% internet coverage, and a diverse set of B2C e-commerce merchants, lowering business costs. That's the state of things in Kenya. Still looking at African perspective regarding Zimbabwe. Zimbabwe will investigate allegations of money laundering and gold smuggling that were aired in an Al Jazeera documentary last month. The government said in its first response to the broadcaster's revelation. Government takes the allegation raised in the documentary seriously and has directed relevant organs to institute investigation into the issue raised. Information Minister and Publicity Minister Monica Mustvangwa said in a statement in the capital Harare on Tuesday, any person found to have engaged in acts of corruption, fraud, or any form of crime will face the full wrath of the law. Back home in Nigeria, the National Bureau of Statistics, NBS, has said that foreign investment in Nigeria decreased to $5.3 billion in 2022 compared to the $6.7 billion recorded in the previous year. NBS disclosed this in its latest capital importation report published on Tuesday. A breakdown of the report reveals that in the first quarter, Nigeria received $1.57 billion in foreign investment, followed by $1.53 billion in the second quarter and $1.15 billion in the third quarter. The fourth quarter saw a decline in foreign investment with a value of $1.06 billion. In terms of state-by-state analysis, Lagos State attracted the most investments with $3.59 billion, followed by the Federal Capital Territory, Abuja, which attracted $1.62 billion. Other states which attracted foreign investments in 2022, although minimal, included Akwa Ibom, Anambra, Ekiti, Enugu, Katsina, Kogi State, Oyo, and Plateau State. That's the outlook regarding foreign investments in the country. Delay in renewal of work permits for AP's pilots has disrupted the operations of the domestic airlines, leading to rescheduling of flights for 3 days. According to APs, the pilots struggled to renew their immigration documents, but the Nigerian Immigration Service, NIS, has intervened to resolve the situation. It also had unscheduled aircraft maintenance. The airline said the pilots had begun to return to Nigeria following intervention of Immigration Service. Good to have the recovery and the return of the pilots for APs. Let's get to talk about global economy and the opportunities in it. Data expected to be released today, beginning with the economic calendar. The economic calendar indicates expected data to be released today, Wednesday, April 5th, 2023. Let's look at the calendar now. According to economic calendar, early hours of 1 p.m. expected data to be released for Mexico core inflation rate year-on-year for March. It's expected to be out. Previously, it stood at 8.29%. The consensus and forecast have different perspective. The market forecast is that the data should get to 8.1%, but investors and analysts will get to find out around 1 p.m. By 1:30 p.m., as highlighted with red, the balance of trade for February in Canada is expected to be out. Previously, it stood at $1.92 trillion. By 1:30 p.m. still, it would be a good time to x-ray and look at the data for balance of trade in the U.S. Previously, it stood at a negative $68.3 billion. Furthermore, let's look at the afternoon period around 3 p.m. what the data outlook would be that would be released. Beginning with 2:30 p.m., it is expected that there will be an outlook from the International Monetary Fund as well as World Economic Outlook in that direction. Afterwards, a key index analysis would be the ISM non-manufacturing PMI, the Purchasing Managers Index for March in the US. Previously stood at 55.1, indicating the private sector performance in the US. The forecast is indicative that it might slow down to 54 index points. By 3 p.m., we'll get to find out what the outlook would be. Let's stick with the US economy. Looking at the US job openings is near 2-year low. The number of job openings in the US fell by 632,000 to 9.9 million in February, the lowest level since May of 2021, and below expectations of 10.4 million. The largest decreases were seen in professionals and business services, healthcare and social assistance and transportation, warehousing and utilities. Regarding job openings, it would be a good time to look at charts indicating United States job opening. The chart shows, some decline in job openings, as we've talked about, as at April 2022, job openings in the country were far up to 11.755 million. As at July, it slowed down to 11.38 million and dropped even further in October 2022 to 10.47 million. Went further upward then, but by January, it did slow down. January 2023 slowed down to 10.56 million and further dropped recently to 9.93 million. Indicating slowdown in the jobbing area of the US. Let's get to talk about African economy. Uganda. Uganda's inflation rate drops to 7-month low. Uganda's annual inflation eased for the 5th straight month to 9% in March 2023, down from 9.2% in the previous month. It was the softest reading since August last year, as prices slowed down primarily for furnishing and household equipment, recreation and culture, transportation, as well as housing and utilities. However, prices continued to rise sharply for food and non-alcoholic beverages at 20.9%, the same pace as in February. Alcoholic beverages and tobacco, personal care, social protection, miscellaneous goods and education services. On a monthly basis, consumer prices inched up by 0.6% in March, the most in 5 months, after a 0.1% decrease in the prior month. Let's look at the charts indicating inflation in Uganda. Well, inflation is usually about the rate of increase in the prices of commodities, as well as decline in the value of the country's currency. In Uganda, as at April 2022, inflation was as low as 4.9%, but it went further upward in July 2022 to 7.9%, and it kept going to a peak point in 2022 in October 2022 to 10.7%, indicating huge difficulty in the country, but began easing and then got to 10.4% in January 2023 and slowed down to 9.2% and 9% currently, indicating improvement in the economy of the country, showing that prices are slowing down for commodities, as well as the value of the currency in Uganda is getting stronger. Still talking about businesses of commodities now. There's no sign of a slowdown in central bank gold buying. In February, central bank gold reserves rose by another 52 tons, according to the latest data compiled by the World Gold Council. It was the 11th straight month of central bank net gold purchases. Through the first 2 months of 2023, net central bank gold purchases came in at 125 tons. This is the strongest start to the year since 2010. China was the biggest buyer in February. The People's Bank of China increased gold holding by a reported 24.9 tons. It was the 4th consecutive month of reported Chinese gold purchases. In that time, China's official gold reserves have grown by 102 tons. The Chinese Central Bank accumulated 1,448 tons of gold between 2002 and 2019, and then suddenly went silent until it resumed reporting in November 2022. Many speculate that the Chinese continued to add gold to its holding of the books during those silent years. But it would be a good time to look at the metal market to see the impact of this buying for gold, checking the price of gold in the metal market, as well as steel, copper, and the rest of the commodities. The market this morning for gold has shown that gold has gotten to the $2,000 mark, hitting $20,024 per ounce upward by 4.88 points, a 0.24 percentage appreciation, and gold price has been going higher. For silver, there's a slight drop in the market this morning, current price $24 per ounce. Copper, $3.95 per pound, downward by 0.027 points. For steel, it's seen a slowdown after reaching the 4,000 mark, dropping by 76 points. Current price for steel is 4,032 Chinese yuan per ton. Iron ore slightly downward, lithium downward. The metal market is slightly downward this morning. Let's have a look at the energy market, checking the price of crude, the US crude, as well as Brent crude, Nigeria's price benchmark. This morning, crude price has been solid after recent cuts in production outputs by OPEC+. But current price for US crude WTI is $80 per barrel, upward by 0.25 points, a 0.3 percentage appreciation. For Brent crude, which is Nigeria's price benchmark, is $84 per barrel, slightly upward this morning. While natural gas a little here, a little there, gasoline the same story, heating oil not very solid in the market. Coal prices downward by 5.35 points. Let's look at the agricultural market too, to see the price of wheat and the rest of the agricultural commodities this morning. Soybeans, $1,512 per bushel, downward by 5 points, a negative 0.33 percentage decline. Market is moving quite fast. For wheat, it's $679 per bushel, downward by 12.22 points, a negative 1.77 percentage decline. Lumber slightly upward by 6 points. Palm oil had dropped away from the 4,000 mark, dropping this morning by 55 points. Current price for palm oil is 3,911 Malaysian ringgit per ton. And that's the outlook of the agricultural market this morning. Good time to look at the stock markets. Not necessarily the stock first. Let's begin with the foreign exchange market, and Dan Deming will give us outlooks on this one. Euro futures rally to 8.5 weeks high as increased economic slowdown concerns pressure the US dollar. Let's find out more from Dan Deming.
Currently priced at 1.10, so retaking that 110 handle as well. And I think when you look for driving factors, a couple things to point to. Really, the primary driver appears to be the U.S. data releases this morning. We had several releases highlighted by the JOLTS job data as we move towards the non-farm payrolls later this week. And that came in much lower than anticipated, indicating job openings have decreased quite a bit on a month-over-month basis. And that's an indication that there's a shifting dynamic in the jobs market. And also that's something the Fed's been watching very closely. So we're seeing that having an impact on various asset classes. And I think that that's contributing to why we're seeing the euro and other major FX markets moving higher today. Also, factory orders and durable goods coming in below expectations. Couple that with last week's data points that showed some economic slowing, and I think now we're starting to see the potential impact.
Thank you, Dan. There's been a slowdown for the US dollar, but it's quite accurate to find out more from the market. The euro against the US dollar this morning, as well as Naira's perspective against the majors, the US dollar and the pounds. Let's find out from the market, the forex market. The market outline this morning has shown huge negativity for US dollar. After going further up to 1.09, we've not seen the euro gain against the US dollar this far. It's always been that struggle between 1.6 and 1.7. But a slight drop in the morning market for pounds against the US dollar. It's gone to 1.24 as of yesterday, downward slightly. This morning is 0.19% decline. The Aussie also struggling slightly against the US dollar this morning, but on the overall, on the weekly basis, the US dollar has struggled against the rest of the majors. Let's look at Naira in the market, the international and exchange window. 459 Naira equaling $1. Same old from yesterday and previous week. Euro against the Naira, 501 Naira equaling €1. Slight gain for the euro. And pounds against the Naira, 573 Naira equaling £1, gaining by 3 points. Let's look at the parallel market to see the value of Naira in the black market against the majors. 745 naira equaling $1 for buying rates in the black market, and 740 naira to $1 are the selling rates in the black market. Pounds to naira, 925 naira equaling £1 in the black market at the buying rates, and selling rate 912. Euro to naira, 802 naira equaling €1, and 786 naira equaling €1 on the average in the black market at the selling rates. Let's talk about Bitcoin. Bitcoin closes the first quarter with 70% gains. The crypto market has continued to creep higher over the last week, ending the first quarter of 2023 on a positive note. Since the start of the year, Bitcoin has led the crypto market, making 71% gain, even amidst increasing regulatory pressure. And the collapse of several crypto-friendly banks has been an issue in recent times. Yet in the last week, this trend has changed. Ethereum has pushed ahead to add 2% as Bitcoin stayed flat. Let's move to the market, the crypto market, to see the position of Bitcoin in the market this morning. The crypto market. Well, it's been that of positivity, Bitcoin gaining 311 points this morning. 28,572 market is moving fast. US dollars for one Bitcoin, 1.1% appreciation. Ether also is gaining by 32 points. Binance, Cardano, Solana, Ripples all solid this morning. We'll get to talk about other issues in the business world as we move quickly to the stock markets in Nigeria. Let's move to the Nigerian stock market after the Asian market has shown his unfair share of struggles this morning. The concerns from the Asian market has been quite difficult, but the Nigerian market also showed its difficulty from yesterday's closure. The Nigerian bourse reported a 81.14 billion naira loss in the stock market capitalization on Tuesday. Also, the all-share index depreciated from 54,184.34 points to 54,035 points, shedding 148.95 basis points for the all-share index. Over 296.73 million shares, valued at 3.06 billion naira, were traded in 4,590 deals on the exchange floor. Let's look at the top gainer. SCOA led the gainers list with a 10% rise in share price to move from 90 kobo to 99 kobo per share. The bottom loser. Multivase topped the loser's table after shedding 32 kobo to drop from 3 naira 24 kobo to 2 naira 92 kobo per share. The top volume then. Fidelity Bank led the day's top trading with 46.58 million shares, valued at 249.36 million naira. Here we draw the curtain in today's edition of Business 360. My name is Blyden Kim. Thank you for watching.